Hi everyone, this is Victor from the Fifth Person. At Fifth Person, we invest in great businesses, be it for dividend or capital gain. My job is to help retail investors to do the same so that they can grow their wealth safely and consistently over time. So over the years, we have been getting a lot of questions from our readers about investing, and we're going to be doing a series of videos to address all these questions, and hopefully it can be helpful to you and of course bring more clarity to you as an investor. Okay, so my first question I feel is how to determine competitive advantage of the individual company. So there's three ways you can use to actually determine the competitive advantage of the company. First way is that usually when the company have competitive advantage, right, their product or service are usually the preferred product or service. So that's one way you can look at. The second way is that those companies with competitive advantage, right, they usually have better pricing power as compared to their competitor. So that means their product or services, right, usually is a bit premium to their competitor. And lastly, right, because of their competitive advantage, right, these people, right, usually have largest market share in the niche or the industry they are in. So that's another way you can look at. So remember, when you assess all these competitive advantage of individual company, do look out for these 3 points. Okay, so let's move on to the second question. What is the criteria to classify a stock as mid-cap or big-cap? So let's start off with the US term. In US, right, the mid-cap companies are usually between US 3 billion to 10 billion. Okay, and the large-cap companies are usually above 10 billion. Then the above 100 billion type of market cap are usually the mega caps. So this is how US classify between the category. But for the Asia category, right, for mid cap, right, is usually between 700 million US dollar all the way to about 3 billion. Then anything above 3 billion, right, in Asia is actually large cap. So this is how the classification of the mid and large cap stock between Asia and US. So let's move on to the last question. The stock price usually drop after they announce the issuing for rights. I've missed the deadline to buy the REITs in order to be eligible to exercise the rights. Buy now or should I wait till they exercise the rights? Okay, so my take is that even though you miss buying the REITs to get the free rights, right, you still can buy the rights off the market but with a fee. And on top of that, you still need to exercise. So generally when you buy into the REITs, it's at a higher price. So, but my take is don't do that. But you can actually wait until they exercise finish all the rights and accounts for all the dilution, and the share price will definitely drop according to the rights price, and then you buy into the REITs again, which is the adjusted price after the rights. So that will be better as compared to trying to buy the rights off the market and exercise it. So that's it. I hope you enjoyed today's Q&A video. If you find this video to be useful, or if you know of someone else who can benefit from this video, please feel free to share with them. And likewise, if you have any other questions that you want to ask, just type in the comment box below so that we can pick the best one and answer them in the next few videos. So once again, this is Victor Chung, and I will see you soon.